Now let's quickly move our focus now to the fixed income and forex market, and for that we are joined by Kubi Momoh, who's the head market risk at UBA. Kubi, thank you for joining us on the show.
Hi, Didi.
It would definitely be great to start by taking a look at the banking sector, the results we've seen from that sector out. We've seen results from Zenith Bank, GT, Access, Sterling. Now, of course, as our viewers saw, we spoke to the CFO of Zenith Bank, and he mentioned the tax exemptions on T-bills and government bonds having a positive impact on earnings. Now, however, at the same time, we know that yields on federal government bonds have declined by about 5 to 6% since August last year, and I think a lot of analysts are expecting further decline. So it would be great to have your thoughts on how continued declines in yields would affect the bank results going forward.
Hello, Didi. Yes, I don't think 2013 it will be as easy to make those kind of revenues from the fixed income securities. But for Zenith Bank, it would depend, a lot of the strength of their earnings in 2013 will depend on the kind of bond profile they built up in 2012. For example, they may have had some one-year treasury bills which will carry them maybe into the middle of this year, and they could also have some 3 to 5 year bonds which they purchased at good rates. So if they have that kind of mix on their balance sheet, as well as other banks of course, with that kind of mix, it will sustain you at least through part of the year. So even though the replacement values may be lower and going forward yields have fallen, at least there's some kind of momentum coming into the year as the bond profile and the treasury bills profile matures. At the same time, there have been some opportunities in 2013 from the special intervention bids that the CBN has done. So they've been at 12.75%. So there's a bit of cushioning, but not as rosy as 2012.
Okay, now of course there was a WDAS auction today, $300 million on offer, $237 million sold. I think that's quite surprising, especially as many people expected that CBN will sell a lot, given that it's the only WDAS auction that we have this week. It seems like we got a lot of support from oil majors.
Yes, it is a surprise. I mean, we'd have expected to see much stronger numbers, because if you look at last week, CBN offered $300 million twice, and if I recall correctly, the Monday bid, Monday of last week, was fully subscribed. 300 million was sold, I think, and then maybe something below that for the Wednesday bid. But what has happened is that a lot of the oil majors, maybe like 3 or 4, have been in the market this week after the holidays, and that's given a tremendous boost to the Naira. I also think there have been some FDI inflows from last week with the listing, with the Barclays bond index listing at the end of March. That has probably also supported the currency.
Now we saw the Naira strengthening today. We have it figured out as 157.98. It'd be good to know your thoughts on where the Naira will close this week.
We'll probably close this week at about these levels. If it weakens, not more than 158.50. It might weaken a little bit if demand picks up towards the end of the week, but nothing significant, because like I said, there's a lot of support for now. A lot of orders have been filled. I don't think we'll go below 158.20, 30, at the very most maybe 158.50 again, which is where we started the week at.
Okay, now, we also heard there was a special OMO auction today. It would be great if you could talk us through that auction. I did hear that 500 billion was offered, subscription of 419 billion, and that the rates remained unchanged at 12.75%. So give us some more insight.
Yeah, well, the maturity of those bills is next year, 17th of January 2014. And what it means is that 400 billion is out of circulation for 9 months, I think, and that has a pretty stabilizing effect on the amount of liquidity available from tomorrow. Tomorrow there's an OMO auction, there's another OMO auction maturing, and I think that's about 200 billion or so. There was an OMO maturity last week, so with this special intervention, at least we don't have that kind of shock hitting the market and driving yields down pretty low. It's taking a lot of funds out, and it's an attractive investment opportunity for the local banks.
What about yields in the T-bill space today?
A bit of decline on the trading, just a bit of, there's been some interest, so a little bit of decline, maybe still hovering around the 11% levels, just some softening there.
Do you think that we could start to see a bit more demand in the T-bill space as a result of attractive re-entry opportunities?
I think, I had said before, early in the year, I said there would always be an equilibrium between what the treasury bill and bond yields are and the perceived risks on the foreign exchange. There's some talk that there might be some slight easing from the next MPC meeting from the central bank. If rates go down, maybe back into the single digits, and there are some worries about whether we'll get to the higher level of the 3% band around which CBN wants the foreign exchange rate to be, then of course there might be a slowdown in interest. So it looks like that point of equilibrium is somewhere where we are now, maybe just a little bit lower.